everybody. I'm recording this on Monday noon, the 30th of January, and I've been reading a lot about the fear of the Federal Open Market Commission, the Fed report coming out this week, and everybody's scared silly that they might be a surprise and have a high rate to the interest rates, like 50 basis points or more or less. The expectation is that it'll be a small one, and that it has to do with whether or not we're going to have loose money or tight money, and whether the inflation is under control, and big macro questions like that. And the market consequently is starting to move sideways, because in times of uncertainty and waiting, we're seeing things start to move sideways and not climb quite so dramatically. See dots swinging there in the weekly and so forth and so on. Now, the reason I'm interested in all this is I want to make sure that when uncertainty comes and great predictions of recessions come and the end of the bull is over and all this kind of talk, which is cheap and easy to come by and also may be true, that we don't underestimate the downside and let overconfidence take us away. So let's just have a little quick review over a few items here. On the monthly, we've been in congestion, and it's perfectly reasonable that we would come back down into congestion and test that again. The supposition being the monthly resistance might be high. The interesting point is that we're seeing the weekly and the monthly PL dots coalesce, and that can be a very powerful symbol on a signal. On the weekly, we're starting to see things move sideways on the weekly. On the daily, a retracement to the weekly PL dot, a nice bounce off of that, but then struggling a little bit to make further progress. It's going up just fine, but coming back down. And I would expect that maybe this week we're going to see further until this weekly dot, there's a live dot right there, kind of starts to reinforce the daily dot and push up higher. Conventional analysis would say that we're doing just fine, normal. Let's look at the quarterly, though, for a second and see where we are in a little larger time frame. Now, on the quarterly, we do have this lovely double dot push with the yearly and the quarterly, and we saw that was coming up with the monthly, too. And that can be a very powerful move to the upside. So the quarterly looks as if it's made a nice retracement to the yearly PL dot and is starting to turn. You see the curve there very nicely and come on up. Well, okay, so far so good. Let's just look at the yearly. This is the chart that is a little more concerning to me. We see the year moving up strongly. Then we see this PL dot rise up to the upside, and sharply the dots open sharply and so forth, and the dots swing to the upside rather sharply. That's often an indication of an exhaust, and indeed we see an exhaust retracement coming back down here to the PL dot and presumably heading back up. But is it heading back up? Are we going to be hitting stronger resistance up in here? And if so, where might the retracement go if this yearly PL dot does not hold as it looks like it's holding right now? But if it doesn't, where are we going to go? Well, the 5-year PL envelope top is here. That's kind of interesting. The 5.2 is here, 5.2, 5.3, 6.1. These are all possible support things, but really keep in mind that it could be the 5-year envelope top. In a severe recession, we could get something back down to 5-year PL dot. Now that's a pretty big retracement. But I want you to keep in mind that such things are not unheard of and possible. And in terms of chart dynamics, it would be completely normal to see after a multi-year, on the time scale, but it moves up here. There's our time scale here. So back to 2010 and so forth. No big retracements until here, 2020, and then we're way back up. But we're running into resistance up in here. This is a little concerning because it's a long way down to higher time period PL dots. just remember, folks, if such things can happen, it would be perfectly normal in terms of chart history. Big retracement, but we could suffer big economic crashes, and we don't want to be foolish and not consider possible downsides. I looked at as I showed on the monthly and the weekly charts, things look kind of good, but they can look good and not be, they can look good before the crash too. So big macro events can happen. We're in a war. We're in a contested, divided country. We have a Fed battling the markets. It's not clear what's happening or what will happen, and inflation is not perhaps as much under control as some think. You look at the price of eggs and so forth. So let's just be aware and keep your eyes open to resistance holding and cracking, as well as support holding. So objectivity of viewpoint is what I'm trying to encourage here. So that's it for this lesson. This movie is already 6 minutes long. It's way longer than I want to talk. So let's see where we go.